Welcome to the ICT 2022 Mentorship Remix. So I want to make very clear before we get into this series that I'm going to be starting here throughout. I plan to do it all throughout 2024. This is how I personally trade the ICT, or this is how because I don't personally trade futures, I trade forex, but it's the same exact concepts applied over into futures, and that's what I want to focus in this series, because for most of the channel it's forex content. So in this series, I just want to do something different with it, and this is solely going to be with futures plays, okay? So, and also want to make clear that this is how I personally look at the marketplace, okay? ICT has nothing to do with this series. It's just how I personally interpret his model and how I use it in my trading, okay? You absolutely need to watch his entire series on this model, and I'm going to leave a link to his series, the ICT 2022 mentorship, in the video description. Okay, in the video description, you need to watch his series as well. Okay, because it's best if you learn it, of course, from the source, from the one who actually created it. This is just how I look at it, and I'm gonna attempt to simplify it in the best way that I can, because that's my job here with this channel. This is my entire objective, is to simplify this stuff. Okay. Also, I want you to check out another video, then it's going to be linked in the video description. I made it very recently. The video is called something like "Why You Lose Money with the ICT 2022 Mentorship." There should be a link to that in the video description. I want you to watch that as well, because it's really going to tie into this this entire series. Because it's like the biggest reason that I see as to why people succeed, or as why people fail when trading this specific model. Because everybody that trades the ICT, or not everybody, but a lot of the beginners that fail to find consistency with this model, they all do the same thing, and they neglect some very important components. Everybody understands the fair value gap. Everybody understands that you have that market structure shift. Everybody knows that. That's what everybody looks for. And what I see a lot of beginners do with this model is they'll go to any old high or any old low that they see on the chart. They'll look for that, that market structure shift in the, usually the range of, 930 to 11, like ICT recommends. Of course, on days that you have news, you'd be a little bit earlier, but everybody just looks at these little random things, right? They look for every single little random move they see, they try to play. And then they wonder why they are failing to find consistency. They're wondering why they are not having the results, because it's a little bit deeper than that. And as I talked about in that video that I will link in the video description, why most people fail trading the ICT 2022 mentorship is because of a few different things. But the big thing here is they don't understand what the draw on liquidity is. They don't have a fair understanding of liquidity, basically. They don't understand liquidity. Okay, so with this series, what I plan on doing here, once a week, I'm going to include a video talking about, the price action from last week's, maybe a setup or setups that we saw play out. And I'm going to go over the entire thought process on it. Okay, the entire thought process on why this was a setup. And that's how we're going to approach this series. Okay, so I don't think I got to get too deep into, I'll go over it briefly. I don't think I go too deep into the entry signals, because if you watched ICT 2022 mentorship, you're already aware of all that. But of course, we'll still go over it briefly. But so what we're going to do here, guys, is we're going to take this ES from Friday first, and we're going to use this as an example for today's lesson. Okay, so with the ICT 2022 mentorship, what you want to be hunting at a few different times. So here are your kill zones. Here are your times that you should be hunting for setups. Get a pen, get a pad. If you don't know it, we need to write it. Days where there is not news. On days where there is no high impact news. So you start hunting at 9:30 a.m. Eastern time. And you hunt in the morning session till 11 o'clock a.m. Eastern time. Again, on days where there is no high impact news, you start hunting at 9:30 a.m. Eastern time. Stop hunting at 11 o'clock a.m. Eastern time. Okay. Now for the after lunch session, start hunting at 2 o'clock p.m. Eastern time until 4 o'clock p.m. Eastern time. We covered that. Another key time, days where there is news, days where you have high impact news, red folder news. You just check your calendar to see what it is. Most of the time it's going to be 8:30. Sometimes it'll be like 8:15. That's another key time that you want to be aware of, that you want to look for the signatures for the entries. That's a prime time that you want to look for it, because news is prime time for manipulation, for turtle soups, for that stop run that ICT teaches you for this mentorship. That stop run that you look for, then the shift, news, a lot of times it'll provide that. Okay? It'll provide that signature that you're looking for. Not always, but again, it is a common time that you see it. So days that you have high impact news, you need to be hunting on those times. That's where you start hunting. You start hunting earlier on those days. Okay? So we've already established when you are going to be hunting for setups. You don't want to be hunting every little move above a high or low that you see. Literally on every single minute of the day. No, you're not doing that. You're having very specific times that you're going to be hunting for setups. Okay? And of course, I think most of you that are watching this, and if you don't know, I'll go over it briefly as well so you understand, but I think most of you understand what the entry signal is and what to look for. You look for the shift in market structure, which is, if you're going long, a crack of a short-term high. If you're going short, crack of a short-term low. And you want to see the fair value gap confirmation and all that good stuff, which we'll go into here in a moment on this play, because this is a setup from Friday that we saw. Now on Friday, we had high impact news. We had high impact news at 8:30 on Friday. That gave us setup on this ES, which I posted in chat. Again, I'm not just looking at this stuff in hindsight. Posted it in chat before the fact for my mentees, which is closed at the moment as well. Because I just, not to get too sidetracked here, right? We're going to get into it here in a moment. But because I know when I say that, I'm going to have people that are saying, mentees, well, how do I get in there? It's completely closed. I have my hands full with that at the moment. I'm not taking on any more people. Okay, so that's closed. So don't worry about that. I'm just kind of establishing that I'm not just talking about this stuff in hindsight. Everything I call in here, everything that I talk about on here, I do call beforehand. Okay. But here's the deal. Let's pull it up, because like I just said, 8:30 high impact news is a key time that you want to be hunting. Overall, this ES is bearish here. Overall, it is bearish market structure on the 4-hour chart at least. And what we saw on Friday, because let's start from the very first thing that we saw this morning. Okay. Where did it open up at? It opened up right here. Here's midnight. So on days where you have high impact news, on days where you have red folder news, a lot of times that's where you'll see the majority of that manipulation occurs. It'll be at high impact news. And a lot of times you won't see much in London. Okay. Sometimes you will. But when you have the high impact news, a lot of times that manipulation, that's the key time that you want to look for that manipulation, is with news, with red folder news. Okay. And here's what we saw. We saw ES open up right here. Here's midnight. We're coming to Friday. It's a brand new day right here. It's midnight. And what does it do? First things first, as soon as it opens up, well, since it's in kind of a weak trend at the moment in the short term, what we saw take place here is it attacks previous day's lows first, because that's a very powerful draw. Whenever you have that momentum to the downside, like in this scenario, the trend is bearish at the current moment. Previous day's lows is consistently serving as a draw. That's a very powerful draw. Its objective is to take out previous day's lows day after day. Take out that low, take out that low, take out that low. Because right now we're in we had that swing high form a few days ago. Okay, so you can see right here, if we go to the daily chart, let me just point that out real quick. We're in a downswing at the moment. Okay, overall it's still bullish market structure, but it's in a downswing, because you can see right here we got that swing high that was put in, high side in the middle, lower high on the left, lower high on the right. As soon as that swing high is put in, its objective, price's objective, is to continuously run out previous day's lows. Right here, look, takes it out, boom, it closes right there, opens up right here, takes out previous day's lows, boom, comes down, takes it, opens up right here, Judas swing, takes down previous day's lows, boom, right here. Okay. And that's what you've been seeing, because the current momentum is to the downside. It's in a downswing at the moment, and its objective is to continuously run out previous day's lows until we have that upswing that happens later on, aka when you get a swing low put in, and then its objective is to continuously run out previous day's highs, like you'd see like over here, for example. Okay, so that's what we saw, and we saw that same trend continue into Friday. It ran out previous day's lows, but it took out that liquidity early on as well. So that's another key detail to note here. And we also understand that we have 8:30 high impact news that's coming up, which we can understand, we can anticipate is prime time for manipulation, for turtle soups to occur. So we come into midnight, right away, boom, we take out that. It's just continuously selling off all throughout London session, selling off, selling off, selling off, selling off, selling off. And again, you can see London is just a very weak trend. So it's all overall it's bearish. But here's the deal: we've taken out previous day's lows, and we're continuously making new low of days here. Okay, and then I see this right here. Let me actually zoom in a little bit so you can see it. So I saw this starting to perk up right here. You can see like right here where my cursor is. Let me actually rewind it a little bit. Let's use the replay mode. Okay, so you can see this thing starting to perk up right here. This isn't an ICT. It is not an ICT 2022. And a lot of people would look at this and they would think it is. And again, this goes back to what I was saying earlier, is taking every little, push up that you see cracking a short-term high with a fair value gap. That don't cut it, guys. That does not cut it. This is not a ICT 2022 mentorship play right here. Because you might be thinking, whoa, hold up though, Mike. But we go to the 15-minute chart. And we recently we took out this low right here. Look at that swing low, and then boom, we're starting to get this push up. How is it not ICT 2022? Well, a few things. Remember, our key times is number one. This is like, yeah, it's into New York session, but it's not. It's before high impact news, so it's right before high impact news. That's not something that you want to mess with, because as I pointed out to my mentees the other day, when I saw this thing pushing up here, I was not convinced. I was not convinced that this was moving up. I saw this push up right here. I understood that it's been selling off all morning, and we get this big push up right here. We got this fair value gap about to be formed right here. We got this strong close right here. And as I've talked about, like the fair value gap, the strong close, all that good stuff is signatures for a high probability shift. But we have to utilize time as well. We have to utilize time into the equation here. That's why not every single little push up that you see is important. Okay. Sometimes, now it all has a reasoning, right? But it's not important for a entry setup. What this was doing right here, the only intention of this move up right here was to simply create liquidity, okay, beneath this low. Because you could see it looked very bullish. Like if you look at this thing, it looks so strong, it looks so bullish, but that's the intention. The intention of this big push up right here is to create that liquidity right here, okay? Because when you get a big push up like that, what do you think is going to happen? What do longs think when they see this? And people that don't really dig into the ICT 2022, what do they see when they see this? Thinking, oh dang, this thing looks so good. This thing looks so bullish. Look at this big explosive move up. Because when you're looking at this in real time, it does look very bullish, guys. It looks very bullish. It looks like it's about to have that reversal to come up and take out these equal highs up here. Oh yeah, buddy, it's starting to ramp up, right? It creates liquidity. Because then where are longs going to be keeping their stops at whenever this happens? They'll be keeping their stops beneath that support right there, the absolute low, or underneath this level as well, right here, right before you got that big push up. Again, may I remind you, right before red folder news. And we understand that red folder news is key time for manipulation to occur. Key time for turtle soups to occur. And right away, I can identify that we have this fake run right here. We're creating this liquidity right here, right ahead of that news, real conveniently, right? So I noticed this on Friday. So of course, you're not going to get FOMO. You're not going to jump in here and say, okay, look, let's let this thing run up to the moon. You want to let news get done. Now, again, guys, like I'm not saying I trade exactly like ICT. I don't, not in the slightest. Like, again, this series that I'm making is not like the blueprint as ICT teaches the 2022 mentorship. Let me make that clear, because I don't want anybody to get that idea. I'm just showing you how I approach it. Okay. I'm showing you how I approach it, and how I've been able to find consistency, and how I'm able to just simplify it for you. Okay. And also another key thing here is don't trade during news. Now you can trade after. And whenever I say this on Twitter, people get always, get their, their panties up in a bunch, right? They get all mad. It's like, because I always say there's no edge with news, right? That's something that I say quite often. And then I have, a bunch of people that, try to prove themselves to me, and then they come in my comments and post their charts and saying, I disagree. There's nothing wrong with trading after news is done with. Okay. What I mean is, when I say that, don't trade during news. Like, I'm not like, you don't want to just go on ES here and establish a position right before high impact news. Even if you understand that it's creating liquidity right here and it's starting to push up, and you want to look for a move lower to attack this, you still don't. Because what happens if that news releases something else and then it just ramps up on you? I got to stop, Mike. That stop ain't going to save you. Your stop isn't going to save you in that environment. Okay. You're going to get slipped badly, very badly most of the time. So it's not going to save you. That's why you don't mess with news. A lot of beginners, they just don't quite grasp that. They don't quite understand that because they just haven't been around long enough. But if you have any ounce of experience, then you know what I'm talking about. Okay, you've probably been burned, as I have in the past, whenever I was newer with it, right? You live and you learn, right? But I can say that all the time. I can say that all I want, but most people are going to have to learn the hard way. Me saying it right here in this video isn't going to get through a lot of people's heads. It goes back to that old quote. You can tell somebody a stove is hot, but some people, they just got to touch that shit, right? That's going to be the case with a lot of people. So I just want to make that clear as well, right? So on ES, we're pressing up here. We created that liquidity beneath this low. We're coming up on high impact news. So of course we want to see that high impact news play out. We're not positioning anything before that high impact news. We want to see that play out. We want to see it do the damage. Okay, so we can see we're coming up on 8:30 here now. What happens? This thing, the rug pulls out, right? The complete rug just pulls out on this thing. This thing was looking so bullish. Just a moment ago, this thing was looking so bullish. It was ramping up. It had some nice momentum towards it. Pulls the rug just like that, out of nowhere. Just pulls the rug and it cleans that liquidity it just created right here. So what's it doing? It created that liquidity, but also it is making a new low of day, which is a key liquidity pool. Low of day is a liquidity pool. We just made a new New York low, because we're in New York session to this point. It's already taken out. London session began over here at 3 o'clock, but so we're making a new London session low. We're making a new York low as well. Okay, it's in a discount marketplace at this point. It's overall bearish, but a discount marketplace, and news is done with. So I put all this together, right? Even though I prefer setups that are aligned with the trend, because those are better, it's in a deep discount, selling off all throughout London here. And now we have the news that has happened, and we just took out a key sell side liquidity pool. Go to your 15-minute chart. There you go. There it is. There's the signature right there. See that swing low in the 15-minute, as ICT teaches you. Use that 15-minute chart to look for your liquidity pools. There you go, guys, right there. That was right before the news. It created that liquidity right here. It was ramping up. Look at this. You have these swing highs up here. Look how it was ramping up. Looks so bullish. Breakout buyers are all over that thing, guys, because it's breaking these highs. It's ramping up. They're thinking, dang, this thing's been selling off all throughout London session. This thing was so weak, and now it's starting to push up. Now it's starting to find momentum here. It's ready. It's finding its bottom. News is coming up. News is just going to propel this thing to the next level. It's going to take out these equal highs up above. That's what a lot of people are thinking in that moment. But again, we understand that news is prime time for a stop run. So we want to let that do the damage first. We understand that it's pushing up, and this is intentional before the news to create liquidity right here. Because, when we have a big thing like this, a big move up like this, cracking these highs, the individuals who are pulling the strings, I guess you could say, they know how you think. They know exactly how you think. They know what you like to say. They know what most retail traders are looking for in that chart. Because everybody, when you see something, because again, this is what you learn in the textbooks, right? When you see something pushing up like that, looks very strong. What is that? That's a breakout. It's got momentum towards it. It's making new high day, or not new high day, but it's making new highs right here. It's getting out these highs, and it has a lot of momentum. It's going to entice you to get in. It creates liquidity. That's the intention right before news, which is where we anticipate stop runs occur. So see how I'm not just going in here and I'm not just going in here and looking for any random old high or low. If that was the case, then I would be saying, oh, there's a ICT 2022 buy setup. No, you have there's more that goes into it to frame that idea. You got to understand the liquidity that's being taken out. You got to understand time. You got to understand market structure, all that stuff. And that frames your idea. That frames your trade idea. So it's not just going in and looking for any break of a low or a high. There's more that goes into it. It goes deeper than that. Okay? And that's what we saw right here, guys. I saw it in a deep discount still. I saw it making a new low of day here, which is, taking liquidity. And now we have news that is done with. It's out the way. Which is, we got to understand again, is prime time for manipulation. This was a turtle soup. This is what we call a turtle soup right here, aka a fake run. Okay? Because it takes out that liquidity that it created. But also on the other end of the coin, what do you think it does right here? Takes out those sell stops, but it also creates buy side above. So you kill two birds with one stone when you do this. Because if you go to the lower time frame here, guys, you can see this big flush right here. What do you think a lot of people are thinking right here? This is weak. It's selling off because, well, and the trend was bearish, but we got to consider a few things in here. News just happened. It just took out that liquidity. It's in a deep discount marketplace. So whenever we have a big flush like this, it cleans out the sell side, but it also creates buy side right here because now shorts see this big flush. They see this displacement. And there's a lot of individuals, even that trade the ICT 2022, that think this is an ICT 2022 setup to the downside. Let me say that again. A lot of people who don't fully understand the model, they see this and think that's a setup to go short on. They do. I mean, look what it did right here. It took out these buy stops right here, right? Look how it came up and it took out these buy stops right here. Doesn't ICT teach that? They took out right here and boom, it gets that big move lower right here. Look at that. And it leaves the 1 hour, or it leaves the 1 minute displacement. It comes up to a premium, you look for a short right there. That's not it. That's not it. Because news did the damage and it already took out this liquidity right here. Remember, what was the most recent liquidity pool that was taken out? We took out low of day sell side liquidity. Now we take out low of day sell side liquidity. This goes back to the video I made on learn how to identify the next draw on liquidity. And again, if you haven't watched that video, I highly recommend you watch that video after this one. I'll leave a link to that in the video description as well, how to identify the next draw on liquidity, because it like ties in perfectly to this. And it's very important to trading the 2022 model. Okay. So we've already taken out that liquidity on that push lower right here. We got that fake run low. We got the fake run higher that created liquidity right here. It took it, but it's making a new low of day, which is sell side liquidity that's taken. Okay. And now what do you think we want to see next? Now we want to see the signature, because now news is out the way with. You don't want to hold during news, but after it's done with, I consider that fine. Some people may have different opinions on that. I'm sure plenty do, but I believe after the news is done with, it's finished with. That's the key thing. It's finished with. And then you get your signatures, then it's fine to go, play it. But that's just me. That's just, that doesn't represent anybody else's opinion. It's just myself. And what I see right here, it gets that move lower, and that's going to create liquidity again. A lot of people look at this, it gets the ICT 2022 to the downside, right? But it's not, because we understand it's taking out the liquidity right here. News is done with. The first run, not always, but a lot of times, the first run from news is the fake move. It's the fake run. Okay, just like we see with our manipulation moves in London session. What do you see a lot of times over there? The first move in London is typically the fake move, and then you'll see, price show its hand later on and expand. You see that same signature that you see in London, but with news it's just a smaller time frame, right? You saw that right here. So we can see right here, we get our move lower, which is our turtle soup. This is what we call a turtle soup, a fake run. And then it takes out these lows. That's the intention of news. Okay, now it creates buy side up here. Okay, and what I'm looking for next is I'm looking for a change in trend, because we've already taken out this liquidity. That draw has been taken. It's done with. It's out of the marketplace. So after we get a change in trend here, what do you think the next draw is going to be? The high of that displacement move that you got to the downside right there. There's buy side liquidity above that level. Okay, that is New York session highs. New York session highs is a key liquidity pool. And we've already taken out New York session lows right here on this push lower. And if we get a change in trend, it's taking out New York session lows, a change in trend after doing so. Where do you think that momentum is going to, where do you think that it's going to seek next? After you get the change in trend, it's going to seek the next key liquidity pool, which is buy side right here. And remember, we created buy side on this push lower, that big strong flush right there. It takes out this liquidity, but it also creates buy side liquidity right here in the process, because it was a big flush. Now, what I'm looking for is a change in trend. Okay, I'm looking for a change in trend to the upside. Oh, look at that pretty big move, right? And then is it cracking a short-term high? It is right there. Look at that. Look at my cursor. Now, this is the entry model for the ICT 2022, as I'm sure a lot of you are already aware of. After you have that liquidity run, because we've already confirmed on this move lower right here, it took out sell side liquidity. It took out these lows right here. See that? We took out those lows. We came up, and now we're cracking this short-term high right here. See that? High high in the middle, lower high on the left, lower high on the right. That is a swing high level. Again, where my cursor is, highest high right there in the middle, lower high on the right, lower high on the left, swing high level. You need a break of a swing high level to have that shift in market structure to the upside. We see that happening right here. It comes up and it cracks that short-term high. Is it ready yet though? It's not ready yet. Why? Because we still need fair value gap confirmation. Okay. Fair value gap confirmation. Right there. There it is, guys. Literally right there. Draw your Fibonacci. Now, a fair value gap is 3 candles. 3 candles for the fair value gap. 1, 2, 3. 3 candles. And I'll even leave a link in the video description to my video on fair value gaps and how to identify them. All right, the link to the video I'm going to leave in the description. It's not like really how to use them, it's just how to identify them and what they look like. Because not every single fair value gap should be used, obviously, but it's just how to identify them. I'll leave a link to that in the video description, but I kind of explained it right here. And it's 3 candles. 1, 2, 3, and then the top of this first candle and the bottom of that third candle do not touch. Oops, let me redraw it on there. I don't know why I removed it. Right there. There's your fair value gap confirmation. So we got this flush that took out New York lows. We came in, we put in a short-term high. We came up, we cracked a short-term high, left fair value gap confirmation. Now we just need to pull back. Look right there, guys. What do we got right there? We got to pull back into a discount marketplace. Okay. That's the entry signal. That is the ICT 2022 entry signal. Is you want the shift in market structure, the crack of the short-term high, fair value gap confirmation, then you want to pull back into a discount to enter. Right there is 50% equilibrium. You can literally get in right there. That you could have your order sitting right there, ready to go. Look at this. Let's say you got in right there, and you would risk the low. Okay, so you could risk this low right here. And where do you think your profit target is going to be? That's up to you. Okay, now in regards to the profit target, you could shoot for the low hanging objective right here and just take a simple 1-to-1. There's nothing wrong with that at all. And you could just take everything off the table right there. There's nothing wrong with that at all. Let me make that very clear. You could just take a simple 1-to-1. That's not the other way. That's not the only way to do it. Or you could scale out. You could take a partial there and then take the rest off where? Where would your other objective be? Look right here. The absolute high that we made before that stop run right there. That is New York session highs. That's a key liquidity pool. That was the absolute high right before we had that low. So again, individuals who are in this short, which is a lot of people, believe me, there was a lot of people that had their stops right here because they saw this big flush lower. And even a lot of people thought that that was the ICT 2022 mentorship, was when you got it up coming into a premium right here. There was a lot of people that were going short on this. There was a lot of people that were going short and look for it to hold this high right here. But again, it comes down to having a firm understanding of liquidity. And a lot of those same people who got caught in the upside on this, those are the same people that are saying, dang, this thing doesn't work. Just like the T 2022 doesn't work. It doesn't have any good fall through. It's because you don't understand it. It's because you don't understand liquidity. That's because you don't understand time. You don't understand any of that. So all you got from his lessons, because I think a lot of you that watched that didn't really pay any attention whatsoever. It's not just a fair value gap. It's not just it's not just taking an old high and having that fair value gap, having the shift, and then playing every single one of those. You see, it goes a little bit deeper than that. You got to have a little bit of a deeper understanding of that. And that's what I'm giving you here. And that's what I'm going to give you in this series all throughout 2024, because we're going to be talking about a lot of different examples. Lots. Okay. But as I've already established with this, we could target a few different areas. We could target the low hanging objective right here, or you could even target this high up here. Okay. So let's say this is what I'm talking about right there, as I just said. That's valid. That's valid right there. And look at the risk reward. That's over 2-to-1 risk reward on that, guys. And you're not forcing it. It's just there. It's available to you. Okay? You're not forcing anything. Because, again, that's another big issue that I see with traders is they force the risk reward ratio on the chart and they don't play the market structure. Right here, the market structure provides it. You understand that it's going to seek likely that next key liquidity pool, because now we got this change in trend right here. After taking New York lows, news is done with, the turtle soup is done with. That's out the way, the manipulation is done with. And now it's going to want to seek the opposing buy stops. And it gives you 2-to-1 risk reward on that play. It's valid. Okay. Now, what about another place you could go with your stop if you want to be super aggressive with it? But I mean, the risk reward's already great on this, but you could go underneath the fair value gap right here. Okay, which of course would be even better risk reward. So let's just put it underneath the fair value gap below. There's no other fair value gap down below, so you're good to do that. So you can see right here, there's no other fair value gap down there right there. See, this is the only fair value gap right there. And this is the absolute low. That third candle is the absolute low of that fair value gap. It provides you over 4-1, just shy of 5-1 risk reward on that. Okay. See, I mean, guys, it's right there. It's right there. There's the model in play. Okay. And it repeats. And news, again, news is a prime time that you want to hunt. It's not the only time, but it is a prime time to hunt. It's a time that you'll get a lot of plays after it is done with. Okay. So you can see then, let's see what it does. Of course, it ramps up. And again, all this plugged beforehand. I'm not just going in hindsight now and trying to cherry pick, what I see here. I plugged this in chat the other day. It's very simple stuff, guys. And then boom, just like that. And see, and even that right there, guys, as I said, that's almost 5-1 risk reward. And it's not like forcing it. You're not forcing it. It's just there. The market structure provides it. The market structure, I mean, like, you don't got to have a high win rate. You don't got to have a high win rate at all. Even with like plays like that, you don't. Okay. And if you have everything aligned that he teaches, you have to understand liquidity and all that stuff, you'll still, like, you can have a high win rate, but I mean, it doesn't take much. Like, literally, you can be right less than half the time on stuff like this, and you're going to come out profitable. You're going to come out profitable. And don't think that you have to get a play every single day. There's days where I don't really see a setup for this model on ES and NASDAQ, like a really clean setup. There's plenty of days where I don't see setups. Okay. It's not like every single day I just see, it ain't like every single day I see something as clean as this. It's not. That's not always the case, guys. And you got to get outside of that. You got to get out of that mindset of looking for this every single day. Stuff like this. You don't need it every single day. Literally, guys, one trade like this a week, you could build a career on that. You can make a living off that. You can get fucking rich off that. I'm not exaggerating. Now, it just requires one thing, though, that most people don't have, that need to develop it. Patience. Patience, guys. I mean, because one trade like that, you're risking 1%. That's 4% of one fucking trade. And if you even make 4% average a month, you're world class. And I just showed you that one trade right here. Literally one trade right there. If you can average 4% a month, you're world class. You can get filthy rich with that. You can run up, get max allocated with how many fucking prop firms you want with that. It's available to you, but it requires patience. And a lot of you want to be clicking fucking buttons every single moment. You want to be clicking buttons every single 1 minute candle that's forming. And that's an issue. That's an issue, guys. And then again, that's an issue with a lot of people that fail with this model, is because they're trying to trade everything. They're trying to trade every little short-term high, short-term low that's made. And then when they lose money, they get all pouty and say it doesn't work. The algorithm was changed, right? Nothing changed. You're just impatient. You don't have fucking discipline. That's the only thing here. This model still works. I see banger plays all the time. Or not all the time, but you get the point, guys. On a consistent basis, week in, week out, it gets setups. Okay? But you need to have a firm understanding of, yes, market structure, of liquidity. Market structure and liquidity is all it is at the end of the day. This is just market structure and liquidity. But it's not just some random, taking every little random high, crack of a high or crack of a low that you see with a fair value gap. Okay, a lot of people did that with this move lower right here. Guess what? They got taken. They weren't on the right side, and you would have knew what the right side was, likely, if you have a firm understanding of liquidity, because we already took out New York lows. We understood that news is prime time for manipulation. Okay. News is done with now, and that low's already taken. That liquidity is already taken. Now we get a lower time frame change in trend. It's going to do what? Where's the next draw going to be? As I've taught you in my draw and liquidity video, which I'll link in the video description, to the next liquidity pool up here. That's simple. It's that fucking simple. Okay. But simple isn't easy. And the only thing that makes it not easy is you. Okay. Because again, it comes back to psychology issues, which is, the patience, the discipline. But if you can cultivate the patience and the discipline, you're set. That's the only thing that's holding you back once you learn this stuff, guys. It's yourself. It's yourself. That's it. Because as I just said, literally you can build a career on just one trade like this a week, you build a career. You can get rich. You can get all the prop firm funding in the world that you fucking want. But it comes down to your patience. So as I just said, 2024, I'm going to be, that's how long I plan on doing this throughout the entire year. I'm going to be talking about consistent setups like this, talking about my thought process like I just did in this video, going over all the setups that we see on the week, and that's how we're going to approach it, guys. Okay, so by the end of this, there should be no excuses why you can't, why you don't have a firm understanding, because I'm covering it all right here. Okay, it's going to simplify it for you, and by the end of it, you're going to have such a firm understanding. If you just stick it out, you're going to be pleasantly surprised with your understanding. Okay, and again, as always, as I said at the beginning, you also need to watch ICT's, because he's the founder, he's the creator. You need to see it from the source. And I'm just kind of, in these videos, I'm just giving my, how I look at it, right? But you need to watch his videos as well. Okay. And there'll be a link to his series or to the ICT 2022 mentorship in the video description. Okay. Also watch those other videos that I recommended too. It'll help you a lot in understanding this. And yeah, so if you enjoyed, leave a like, subscribe to the channel, and I'll catch you later.